So Mark, I've heard there's a lot of positive changes in the reverse mortgage industry. Can you elaborate on that a little bit?
You bet, Paul. Reverse mortgages have gone through some changes here in the last year, specifically the last 60 days. Last year, FHA made some major changes to the reverse mortgage program as part of the Reverse Mortgage Stabilization Act. And what that allowed is they reduced the amount of money borrowers could borrow up front with a reverse mortgage, but that's also going to allow the program to be sustainable for a long period of time. Well, when they took away some of that equity from people that they could use in the reverse mortgage, that caused some concerns with people. The general public didn't understand what was going on. So, in August 4th this year, FHA actually gave some of that money back. Some of the equity that you can tap into now with the reverse mortgage has come back. But the number one issue that they've helped with is allowing a non-borrowing spouse to still be protected on the reverse mortgage loan. In the past, what would happen is if you had somebody that didn't qualify for the reverse mortgage, meaning somebody that wasn't 62 years old or older, if they weren't old enough to be on that loan, they were taken off the loan and also taken off the title of the home. So when the older spouse passed away, that younger spouse that wasn't being protected by the loan was either forced to sell the home or refinance within 12 months. That became very difficult, and it caused some misconceptions about how the program could be used equitably. Now, that non-borrowing spouse, if they're not old enough to be on the loan, they're still protected by that by the reverse mortgage. Meaning, if the older spouse passes away and that younger spouse that maybe is in their 50s or early 60s, not old enough to be on the reverse, they can stay in that home for the rest of their life without making monthly mortgage payments or being forced to sell. So that's made a huge change in the reverse mortgage program, and it's allowing people to feel more comfortable about taking that next step and discovering what a reverse mortgage can do for them.
Well, that's great, because I could see a situation where, let's say there is a younger non-borrowing spouse. In the past, if their spouse or if their qualifying spouse passed away, maybe they didn't want to sell. Maybe they wanted to stay in that home,
right.
And maybe after 12 months they were just not in a position to refinance or could not qualify for a refinance. So that did put them in a very, very tough position. So this really makes it a lot easier and gives more people peace of mind.
Yeah,
I can see.
It's just a much safer loan than it's ever been before. The loan is always changing and evolving. It's been around for about 25 years, the FHA reverse mortgage. But now, with the program changes they've made, I just think that the program is going to be around for a long time, and more and more people are using the reverse mortgage as part of the full retirement plan.
Okay. So in terms of equity, can you reiterate again, let's say somebody wants to do a reverse mortgage on a home they already own, how much equity do they need to have?
It's going to be based off the age. You have to have at least one borrower has to be at least 62 years old, preferably both borrowers, but at least 62 years old or older. And you want to have at least around 50% equity.
Okay.
The older you are, the less equity that's required to be had. But between 40 and 50% equity is kind of the sweet spot, so to speak.
Great.